Hey, thanks for joining me. One of the questions I'm asked most is how do I draw trend lines? There's no rule that I can give you, unfortunately. That's the problem with trend lines. Basically, in a bull trend, you join all the lows with your trend line to try and find a support level and to identify the trend. And in a bear trend, you do the opposite. You join all the peaks to identify the downward sloping trend and the resistance levels within that trend. But unfortunately, it's not that simple. Of course, you can also use trend lines in a sideways trending market, so you can identify the channel or the pattern, the triangle, the pennant, whatever it might be. I'm going to take some of the ideas from the trade sheet that I provide each morning for my subscribers, the color-coded trade sheet with my buy and sell levels, my stop loss, my targets. This is the sheet from Friday. I haven't updated it for trade starting on Monday yet. So first, I'm just going to show you a chart where I put a lot of trend lines on so you can try and get an idea of why I draw them and how I draw them. So pretty simple. This is cable right up to date for the last few months, 6 months or so going back. 4-hour chart. We start here with a trend line joining the peaks and the lows as well. This it's a bull trend for sure. As you can see, it's an upward sloping channel. I could possibly describe it as a rising wedge, but I'm not so sure about that. Ideally, the trend line has to be touched 3 times for it to be valid, as far as I'm concerned. 2 times isn't really enough. This trend line was touched twice, and on break, the upper trend line was tested 3 or 4 times. The lower trend line actually on the third test broke down. So that was your sell signal. The market moved swiftly to the downside once it broke not only the trend line, but it broke the 200 period moving average on the 4-hour chart as well. And that was the beginning of a substantial bear trend. So the trend line certainly worked as a good indicator when it was broken, as did the moving averages. Look how the moving averages crossed over nicely as well to confirm a sell signal. But we'll do moving averages another day. Okay, so I have 2 trend lines on the downside here. The more times a trend line is touched, the more relevant it is. So in this case, I have used this trend line here because it really did touch these points a lot. And even on the bounce here, you can see that the trend line was relevant. And even down here, it had some effect because, of course, the market did start to bottom when it hit both of these trend lines. This trend line, I think it's still relevant. It has captured the 2 major lows of the move, well, the 3 major lows of the move. So it probably is relevant. This is the problem with trend lines. You're never quite sure. And this is why you do want to combine them with other things such as moving averages. So for example, in this case, this downward sloping trend line has caught a number of peaks here. So it does appear to be reliable. And in addition, it has come close to the moving averages when the market has peaked and touched those moving averages and the trend line. So it proved to be reliable enough. Again, when the trend line was broken here, at least, well, initially when it broke here, let me try to zoom in a little bit. So here, when the market did break above the trend line, it did hold above it. We did collapse eventually. And then again, we broke above it. Then we start a new trend line. Now, early on, we could have drawn trend lines here because it's at the beginning of the move. And look how it proved to be an important trend line, because even 2 months later, when it was tested, we got a very strong bounce off that trend line. So it is worth keeping your trend lines on for longer than you might think that they are necessary. You never know when they might come into play at a later stage. Again, here, I drew an upper trend line to find resistance levels in the bull trend. And that did work. Again, we've just peaked and turned around. I've now got a smaller trend line here because this actually looks like it could be a head and shoulders pattern. So I'm watching to see if we break below the neckline here. Okay, moving on to the next one. This is Bitcoin. The trend lines aren't quite so clear. We do have a trend line going back here from September. And the only reason I've kept it on really because here I would have given up with the trend line. It obviously didn't hold. But now we've retested it on the rally, and we seem to be holding. It does coincide with the 61% Fibonacci level as well. So that's obviously probably also offering some resistance. But it's interesting how the trend lines can still be relevant several months later. This trend line here joined a few lows, seems relevant. And again, I kept it on there, and look how it has held the bounce here, March, April. So again, longer term trend lines, they can be useful. This trend line is fairly obvious. 1, 2, 3, 4, 5 times it was traded. This is not uncommon. A lot of confusion around a trend line before it finally breaks. That's what happened here. But eventually it did break it. Eventually we did build upward momentum. Again, this trend line here, well, tested almost 3 times. I've left it on there just in case Bitcoin were ever to fall down to the $60,000 area. The next chart is the New Zealand dollar versus Japanese yen. Now, this is a trade that I did put on Friday. And really, this trade was only down to the trend line and the 500 period moving average on the 4-hour chart. I do look at many different time frames. And in this case, the Fibonacci levels were not particularly useful. 78.6% Fib. Okay, yes, it did hold, or at least it was tested. I don't normally rely too heavily on the 78.6% Fib, but the trend line going all the way back to November, that is a pretty long period of time. And it was tested 1, 2, 3, 4, 5 times. So on the 6th test, I have to try a short position. It's been tested so many times. It's proved to be reliable. I've got the 500 period moving average on the 4-hour chart there as well, backing up that resistance. I had to give it a try. And indeed, in the New Zealand dollar yen, we did reverse exactly from my sell level, which was in the 85.80 to 85.90 range. I think we may have just peaked above that. We got up to 86.06, but well below my stop loss level. Of course, you've got to give yourself a bit of room. My stop loss level was 86.30. So I'm giving myself a 40 to 45 pip stop on this trade, which seems reasonable because the downside is huge. You can see that the downside potential is big on this trade. We're trading in the direction of the trend. It's a bear trend. We're selling into the rally, selling into the resistance level of the bear trend. Okay, next up, Canadian dollar versus Japanese yen. I'm selling purely because I've got a confluence of Fibonacci resistance here at 103.75, 103.99, and I've got the trend line going back to February. So that's about 2.5 months old. So the trend line, again, is reliable enough. It's been tested 1, 2, 3, 4. This will be the 5th test. I definitely have to try this trade with a trend line that has proved to be so reliable, especially when I have an area of confluence with the Fibonacci resistance. I'm showing you here the Australian dollar versus the New Zealand dollar. Now, this is when trend lines really don't work very well. In theory, with this sideways trending market, we should be able to put lots of trend lines on here and identify areas where we would sell at the upper boundaries of the channel. I would struggle with this one. I guess that would be a relevant trend line. We didn't quite touch it. We overran it here. We didn't quite touch it here. That would not be reliable enough for me to put a trade on. However, in this part of the chart, these trend lines have proved to be very reliable. As you can see, this was tested quite several times over here, tested again, and on this, what would that be, 4th or 5th test, it proved to be so good that the market collapsed from the trend line. Now we're testing this trend line down here. Okay, we're only testing it for the 3rd time, but the trend line has been in existence for over a year now. Actually, it's been in existence since the end of 2022, and we're now at the beginning of 2025. So this trend line is over 2 years old. And again, it has held to the downside. You can see that I'd love to be able to give you a rule and say, right, with trend lines, do A, B, C, and you can guarantee that this trend line will be good enough for you to try a low risk trade. It doesn't work like that. 2 more examples. Now, the Aussie yen, this is an interesting one. This chart goes all the way back to 2020. I've got my Fibonacci levels on here, which actually haven't worked too well, if I'm honest. But this major trend line here, which I think could be the neckline to a head and shoulders pattern. Again, all of this is down to interpretation. I can't say for sure, but I think this could be the left shoulder. This could be the head. This could be the right shoulder. We broke the neckline. We broke significantly to the downside. It was a big move. And we now seem to be retesting the trend line, and that coincides with a 38.2% Fibonacci resistance at 92.29. So I got us into a short position based on that trend line. I've got it in red because it's so important. It's the neckline to a head and shoulders pattern. And I do believe that that is the case because look, once we broke that trend line here, let me zoom in a bit, we had such a significant move to the downside when it was finally broken. And now we've got a chance to sell on the retest, which is the dream scenario for a head and shoulders pattern. I had my sell level at 92.20, between 92.20 and 92.40 on Friday. We got to 92.21. So we just clipped my sell level, didn't quite go deep enough as I expected, and we've pulled back already to 91.95. So this will be a long-term trend for me. Selling at such a major point, a neckline to a longer term head and shoulders. I mean, look how big this head and shoulders pattern is. This, if I'm correct, has been built over, well, basically since the beginning of 2023, if not before, maybe middle of 2022. I'm going to call it a 2-year-old head and shoulders pattern, might even be a 3-year-old head and shoulders pattern. It's mega significant, and this could lead to a huge move to the downside for the Aussie versus the Japanese yen. And we may just have caught the peak of this move. Of course, if it is a head and shoulders pattern, we will have no trouble breaking 86.04, the previous low, and going significantly further down. So this is a really important example. Okay, lastly, this is not a great example, but I'm showing it to you anyway. Dollar Swiss. You can see here the trend line wasn't that reliable. If I was selling there, I would have been stopped out. My stop loss would not have been big enough to take account of that peak above the trend line. So they can be tricky. You can get false breaks. You need to be aware of that. This trend line looks pretty good. Held 1, 2, 3, 4 times. But again, it overran probably more than I would have held the position for. So you've got to be aware of that. And then within this structure, I've got trend lines which look quite reliable, tested 1, 2, 3, 4 times, held really well here. But again, I would have been trying a long position here based on that, especially when it held so well here, and it didn't hold, we broke. So they're not foolproof, they can work really well, but use trend lines with other tools, such as moving averages, Fibonacci levels, candle formations, patterns, and maybe some tools that you use that I don't use. I hope that is helpful. Please do please do post your comments and ideas on trend lines. Tell me how you've been using them and if you've got any trade ideas for me.